Welcome back to the channel. Feeling good, feeling great. Hope you guys had a great week. I sure did. Before we start, I need you to do one thing for me. I need you to smash that like button, hit the subscribe button. If you're here to find out what a hedge fund is, how hedge funds make money, and how you can be a part of a hedge fund if you qualify as an accredited investor, it's coming up right now. First thing I'm going to talk about is a hedge fund. What is a hedge fund? A hedge fund basically is an investment fund that is only for specific types of investors, which are accredited investors. And they use complex investment strategies in order to invest your money. That's basics of a hedge fund. That's kind of like the top level view of a hedge fund. Now, these strategies that the hedge funds uses are various strategies. We call pretty much from event-driven fund. You can do a global macro fund. You can have an arbitrage fund, fixed income, distressed debt, or quant fund. These funds are, I would say, can be profitable depending on the strategy. One of the key components of a hedge fund that differentiates it from a mutual fund is that hedge funds have the ability to go short and they have the ability to go long at the same time. So you will have something called like a long short fund. So you would long one stock, then short another stock, basically creating a hedge. Something like that. There you go. Hedge. And what you're looking for, if you're going to go long one way and short one way, you're looking for something called market neutrality. So you're looking for neutrality within the market. And that's kind of a short overview of how the long short fund goes. You like some objectives of some funds are looking for market neutrality. You might have a all long fund, you might have a long short fund, or you might have a short bias fund. One of the individuals that was big on shorting was a gentleman by the name of, I'm sure you've heard of him, George Soros. Back in 1992, he made $1 billion in one day by shorting the British pound. It was incredible. He put 10 billion up on the trade. He shorted it. It was a very risky play. Put 10 billion up, shorted the pound, made $1 billion in one day back in 1992. Look it up. All right, so hedge funds are dynamic in nature and regulated on entry. You can only join a hedge fund or be a part of a hedge fund if you're an accredited investor. Now, being an accredited investor gives you the open door to a whole new investment realm. Okay. Now, if you don't know what an accredited investor is, basically, if you have $1 million sitting around liquid, not including your primary residence, and if you have made $200,000 for the last 2 to 3 years consecutively, then you qualify per SEC regulations as being an accredited investor. That's only pretty much the first step to entering into this world of big profits and things along those lines. So let's make it happen. Let's keep moving. Let's make these things happen. You know, in the comment section below, put down some information regarding topics that you want me to talk about in the future, because I'm definitely interested in finding out what you guys want to hear as far as topics concerning finance and investments. All right, back to the hedge funds. I'm sure you guys are familiar with the show with Axe, the show called Billions, and he's a big hedge fund manager out of the New York area, and he has an office out in Connecticut. He's a quote-unquote hedge fund manager, and he has an event-driven fund, and he goes and gets information and is able to make profitable trades from that information. So that's like an event-driven fund. Fixed income, you have bonds, bond-weighted fund, and they have different types of strategies. Hedge funds they also have hedge funds that utilize a lot of leverage, and what they do is they borrow money to invest. Very risky, but it can be very profitable at the same time. So that's one another function of how hedge funds work. Now, let's get down to the money. How hedge funds make money. There's a industry standard fee rate, which is we call 2 and 20, 2% management fee, and then we have 20% on the performance fee. 2% of AUM, which is assets under management. So if you have $1 billion fund, 2% of that would be a cool 20 million. And on top of the performance fee, the performance fee is 20% over and beyond the benchmark. Now that benchmark usually is whatever the S&P index is averaging within a certain time span. Usually the benchmark is about 8%. So over 8%, whatever the hedge fund is able to yield beyond that benchmark, the hedge fund recoups 20% of those profits, and the investor gets the rest. So that's how hedge funds make money. How can you become part of a hedge fund? Not only becoming an accredited investor, you definitely have to know people and be well connected within the financial community and basically be in those circles, because a lot of these hedge funds have waiting lists and they have other requirements internally that have to be met. Some of the more prominent hedge funds, for example, Bridgewater Associates, they've been closed as far as not accepting any new money. It's been over 10 years now. These guys are huge. I would consider them to the point of rock star status. They're managing over $122 billion with a B, billion, $122 billion worth of assets under management. So if you're looking to invest with these guys, you'd rather have some really deep pockets. And moving right along, like I said, put down in those comments section what you think about these videos. What do you want me to do next? And I will put everything together and make things happen. I'm also thinking about doing a video on my experience on Wall Street back in the days when I first came on there as a fresh graduate student, and my internship, a couple of companies I worked with, and what was my role. I think those would be very interesting for you guys to get a first-hand view of the field and pretty much how I worked on the floor, things along those lines. Well, that's all I have for you today. Hopefully that was informative for anyone that was new and wanted to get an idea of how hedge funds work and the requirements for the fund and what it took to get in there. Like I said, hit that like button, smash the subscribe button, and I'll see you in the next video.